Alright guys, so let's have a look at TSLA. Tesla, today it's down 5.5%. Last time we covered this name, it was sitting around its lows before its earnings report. And I was sort of expecting some sort of an upside move, but I was not expecting it to go past 160, which was the resistance. So let's zoom out a little bit and let me show you one thing where this stock right here, right now, year to date, we were in a sort of a downtrend, right? We, after earnings report of Q4 right here, we gapped down and stocks spent quite some time in this range between 204 and 180. And then it did break this level right here, this support, and then it did spend another quite some time, about a OPEX to OPEX, 1 month, in another channel, basically, and killing a lot of premium. But at the same time, it was in a downtrend, but it didn't make it easy for short-term traders, especially option traders, or even if you're a stock trader, if you were nakedly shorting it, it didn't make it easy for you to trade it. And then it did flush again below this channel right here, you can see, going into earnings, and then all this gap up move. Basically, if you look at the body of these candles that we have, you can see only one day right here we had a pretty decent price action, and then right here maybe a little bit yesterday, and there are a lot of people came in and they sold calls. And today stock is down 5.5% with overall market down as well. But it's normal that this stock is pulling back because it didn't fight through these resistance levels with a normal price action. So it's normal that when stock just goes through resistance levels with a gap, at some point in the future it does fill it. Okay, it doesn't matter when, but at some point in the future it does tend to fill the gaps, especially blue chip stocks. So my take right here, right now, is that this is back in the range. So now for TSLA, the support is 50-day moving average. Ultra short term, yes, it did form some sort of an uptrend on a very ultra short term period. But if you pull up the moving averages, 50-day in a downtrend, 200-day in a downtrend, and if you zoom out a little bit more and just draw the larger like trend line that we have for the stock back from 2021, 2022, 2023, we're still below it. Stock is still in a downtrend, okay? And it is normal that during these downtrend times that stock can go up like 50, 60, even 100% up, but at the same time remain in a downtrend. Just like I will mention Alibaba maybe, which was in a downtrend for quite some time, but on its way down, it has made a lot of 50% moves, 50 plus percent moves, 20, 30% moves, because that recent rally on TSLA, which I can't even call it rally because I woke up twice and I saw two pretty big gaps and stock was already up 50 plus percent, 40%. For a large cap stock like this, very, very unusual, but that's what we have right now. And I will be watching as a big resistance level right here, right now, 205, which is this year's resistance level right here. Above it we have 200-day moving average, which is 221 right here, right now. But at the same time, I'm not expecting it to flush right back down, but it can definitely stay in this range, because in the beginning of the video I mentioned that every time it breaks out of some sort of a range or breaks down, it tends to do this. So you don't want to get caught again, like if you are trading especially options, right? If you're selling, of course there are many strategies, basically what I'm saying is that if you're somebody like me who trades naked options, just buying call without owning a share, or just buying a put without like owning a share again to hedge it, you might end up losing money, most of you, because yesterday after that huge up move, there were a lot of call sellers came in, and I just figured that it's mainly those people who own the shares and people who have pretty big capital, because it was millions of dollar worth of value basically came in to sell the calls. And of course today market is down as well. If you take a look at the SPY, it is rejecting that 50-day moving average. We might have, in general, overall market, if we do slip 490 in SPY, why not we wouldn't test 200-day moving average, which would bring S&P 500 basically year to date flat, and we would have 10% correction. That would be our 10% correction, just like we had back in October, right here. Last year, I think, from around July all the way to October. And it didn't make it easy as well. It did just drop, pushed back up, came down. It wasn't like a straight back down to 200-day moving average drop, pullback, correction. So it can do something like this, and so I'm gonna be watching Tesla basically to chop and not make it easy, especially if you are trying to swing trade it. Again, these videos are not financial advice, purely for educational purposes only. Don't forget to like and subscribe. See you in the next one.